Guys, welcome back to the channel. We are going to have a quick look at BTC and at ETH. I'm going to do both in one video because I need to make another video today and if else it becomes a bit too much for me. So I suggest that we straight dive into the content. This is how we left BTC yesterday, and I said we are creating this a little bit of an ascending triangle. That is this trend line right here, and then the yellow horizontal line here. And then we broke out. That was way too early because actually the breakout should be at and around Thursday, maybe leading into Friday. And then we had this breakout, and then now later on we came down again. And now it looks like we want to break out again. So I guess we can say that this pattern is invalidated. The thing that I kind of liked later on was that you have this idea where you have one trading range, and that this was just a deviation above that trading range, and eventually, or usually, then after you lose it, if you go out, then you reclaim it again, and then you go in it, and usually you somewhere test the loss, and then you go higher again. But of course now we are kind of walking out of that trading range again, so it doesn't look all too pretty for that idea or concept. Yesterday when we came down, we reached the golden pocket that is then measured, let me see, from this low to this high golden pocket, and then to go higher. And you can also see that it lined up with the trend line, so that's actually kind of nice. And now we're again hitting the golden pocket, but that is then of course reversed, measured from this high to this low, and now this golden pocket. So the question is, can we go higher or not? Yesterday, for the first time in a long time, we also had a confirmed bearish divergence. Well, actually we already had multiple bearish divergences, but this time it is also with a decrease of money flow. As you can see here, also the money flow came down quite some, and then price is making a higher high here, so that is a 100% confirmed bearish divergence. And we also had it on the 4 hour. As you can see, we're going slightly lower. Money flow still here again, thick in the green. Now, even if you do not use market Cipher because it is a paid indicator, you also have it here on the MACD, and I know that a lot of people use that. So also there you have your confirmed the divergence, and some people even use the RSI. And guess what? Also here you have your confirmed divergence. Now that doesn't mean right away we're going to zero, put in a short, but it does tell me that we need to be a little bit cautious, and maybe we put in temporary a top. For me personally, it would be very welcome because BTC already pumped up so much, and we barely had any retracement. So to cool off a little bit actually would be very nice, because yeah, like I said, this just cannot go on forever. We cannot just keep on marching higher and higher. Matter in fact, what I also saw, by the way, that was yesterday, here on the RSI, you can see that we were extremely overbought here, and also on the 4 hour it was extremely high. Let me quickly see. This was yesterday at almost 90. Well, that's extreme. That's really extreme. The daily is still extremely high, 84, 85. I've even once seen it up to like 88, 89 on the daily. So again, this doesn't right away mean that that was it and now we need to dump down, but it is a big sign of caution. And for market Cipher B, it's also a little bit divided, I have to say, because if we zoom out, then like I already said earlier, on the 4 hour it still looks pretty strong. We can go higher. On the 12 hour we have a confirmed red dot, although money flow is still thick in the green. And for the 1 day, we are probably printing a red dot today. Money flow is still pretty strong. As I said in yesterday's video, I do not expect a big dump down. I actually expect something like this, where you have a bit of a shallow retracement and then eventually to go higher. So not something like this, but I guess the future will tell. Then for the trading updates that we have for BTC, these on the lower end for the naked weekly point of control still stands, then the CME gap fill still stands, and then we have an S&P of this low. For me that's still valid, and maybe a tap into this box, and I said do not preset it. And again, you can see that none of our long trades got hit. We barely have a retrace in this move up. It's slightly frustrating because I just like to give you guys good trades, but yeah, if you're just slowly grinding higher, it's impossible to get into a trade. It's almost like you just need to enter, sit on your hands for a couple hours, and kind of hoping and wishing that price is then higher so you can move stop loss to entry. Of course, that idea is ridiculous because you should not trade on hopes and dreams. You should trade on technical ideas and stop losses and invalidation. But that is almost how it's going lately, because there's just barely any back tests, not even on daily levels, VWAPs, previous day open, previous day high, low, whatever, you can just barely see those retraces. So that's those backtests. So that is quite ugly. Then of course here it was actually very pretty, but it was very late in the session. This was then a perfect kind of textbook retrace into the golden pocket trend line, and now higher, and now again you see here rejection on the golden pocket. So therefore, so far it is nice. Okay, so these trades, they still stand, but I'm going to be more aggressive, and I'm going to put in another long position in case we are coming down one more time, and we're going to take out that low that we put in yesterday to go back into that golden pocket and then to trade it higher. So price will do eventually something like this, and then you get in, and then you get another move up. Another long could be, let me see. Where that I had that. No, I'm gonna leave it like this. I was first thinking about this low right here, but I'm just gonna leave it like this. This is for me now the most important. If you want to be really degen, you can also do something like this. If we are backtesting these highs that you then get into a long, but your stop loss officially should be underneath this low, but I just suggest you put it here, so that in case we are in case we are backtesting these highs, then you're still pretty safe. But that could be a very aggressive option, or a backtest of VWAP once we're getting it, and then I would say after New York Open. Last but not least, I put in this trend line right here. I usually see that once we're kind of heading to the end of a push up, that price is going more and more parabolic, something like this, and then you would see that this now has 2 touch points, but it might not have another touch point again, so therefore this thinner line now has 3 touch points. So yeah, if you then go back one more time to test this line right here that I just pointed out, you can see that it also lines up with that trend line, and that could be then another long trigger to again take it to higher levels. For shorts, because we now have that bearish divergence and the divergences on multiple time frames, the current level could be a short. I'm not going to take it because I want to wait for the price action of New York, and eventually if we would go a little bit higher to the 78.6, there could still be a good short trade, and that it would look like something like this. Stop loss above the high, and then we're going lower, and then actually the first take profit should probably be again that horizontal line, because it was just resistance twice, and then I would aim for that golden pocket 88,000, and this one right here is at 89,300, and then these lows right here where we are maybe looking at for a swing long again at 85k, and that I think that for now would be it. One more thing that I want to put in, and that is that something that I've noticed also is that you see a lot of times the price is moving in channels, and here we can also see that the price so far has been moving quite nicely in this channel. Would we have another push higher and we do something like this, and then you see a rejection, that actually could be a long trade that is at around 95k. That is very tricky. However, the thing that I want to see then, and this is very important, is that you see a continuation of the bearish divergences, so that this momentum wave again is lower and that the money flow keeps pouring out. That is for me 100% a short trigger. The reason why I'm saying this is because I have a 100% win rate on triple divergences, and a regular one, it is good but not as high as the triple one. But the triple one, every one that I took ever in history was always profitable. The thing is only that they barely occur, so you can count them on one hand that they occur during the year. So that just in case that happens and we reach the top of the trend line at around 95k, that for me would also be a short, but I need to see then that triple divergence. That is a cold hard requirement. If not, I'm not taking it, because let's be honest, you're trying to kind of guess where the top is. That is very dangerous, so that could be another trade. Then quickly at ETH, this is the 1 hour for ETH. I was looking at this yesterday. It almost looked a bit like a head and shoulder pattern, and I was hoping and waiting for that breakout that will bring us nice into the box that we're already looking at for a couple of days, but that didn't happen. We're just slowly going higher, and it looks like we are now again rolling over. Here the exact same. It looks slightly more bearish than for BTC. You can see really now that the money flow is coming into the red and momentum waves are rolling over. This actually looks like also finally a bit of a reliever. Also here, very much welcome. I mean, come on, we had 45% from the bottom to the top, so that is quite some. And then we of course still have those two trading setups, and one is then from the golden pocket. This is the the kind of path that I charted yesterday, a little bit out of line, but you still get the idea, is that we would hit that golden pocket at and around $3,000 and then to go higher, because I think that that level will be very much defended. And after that we have that big box, and a big box is then of course the bigger support and resistance that we already had here for a long time, that we could revisit it and then eventually to go higher. That also lines up then with that macro here value area low. So really also treat this as an area, and make sure that, at least for me, I'm not going to preset anything. If you do, then I would say do partials here and keep a wide stop loss and low leverage. You can, but for me personally, I would like to see then how price reacts once we're in that box, because it is a little bit of a big area compared to other long trades that we have here, 4.5–5%. So therefore I would like to see then how price reacts once we reach that level. Actually, I do not want to see it lost, not only because it's the box, but also the retracement gets pretty deep, and you get around that $2,700 level. That is actually already a bit more weaker. So I want to see this hold, but actually I think that we can see some price movements already much earlier, because also here the move down is here still another 10–12%. Never say never here on ETH, but I mean that is a bit more aggressive. Talking about aggressive, then for the long trades, for now actually I would like to see these lows here all being taken out. And if we get an S&P from this level right here, that is at least for this chart 3070, and we do something like this, and we're front running that golden pocket, I am most likely going to take the trade, because ETH is a little bit more wicky than BTC, and sometimes it doesn't hit the levels so perfectly. So I will not be waiting for a perfect retest and a double test here in the golden pocket before we go higher. If I see an S&P of this level, I will take the trade. Stop loss goes underneath the low just in case, because again, if this thing runs, it runs. You have seen it now, 45%, it just goes. And other than that, I wait for the golden pocket or this low right here. That's again at and around the 3000 level. I expect quite some volatility at that level. The nice thing is about this extra trade that I'm now giving you, so the very aggressive setup, is that if we do get that trade, you also have, you also have very nice bullish divergences on Mark Cipher B, at least on the 1 hour. So yeah, we need to see how price reacts once we're there. I mean, like I said, we could also now be in for a couple more days of retracement, which still be very welcome. But in case we barely get those retraces back tested, you name it, yada yada yada, it's so hard to get in position. Therefore I want to be more aggressive, but at least these 3 lows then need to be taken out for me before I take the trade. Yeah, so that is the most important thing here. Okay, I think that will be it for now. That will be it for today for both of these trading setups. Oh, last but not least, I didn't take it yesterday, but this of course was the bounce from the golden pocket. This was then a very nice retracement, but this was very nice, so you could have taken that. I didn't take it because I was focusing on other stuff. Okay, that was then now really it for now, guys. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. And I'll see you guys very soon again in the next one. Thank you so much. Bye bye.